I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, we've got a lot to hit on this morning, but I want to start with the Fed. It announced its decision to leave the rates unchanged, and I'm wondering, did the Fed just tell investors to sell in May and go away?
No. What the Fed was doing, basically, is to say, look, we're in pretty good shape. I hated what happened to the stock market, because what happened is that a blast of future selling came in and no one could really figure out why, but then they sold it down again. This is one of this newfound caution that I have just ahead of the Uber deal. It's just the market was very easy to knock down, because here you had Powell basically saying, guys, it's the best of all possible worlds, and people interpreted that negatively. And some people even said, as I said in my Real Money piece, that they expected him to cut because the president said cut in a tweet. There's a lot of what I regard as being a market that is, and I've seen this periodically, led by whoever trades next, and then the camp followers come. So you had a big sell-off that was unjustified. And what I'm trying to do when I say, look, let's be a little cautious here, is that a big sell-off that's unjustified, what happens if you get something real to sell? So maybe we have a gauntlet, we have to get a trade deal, and we have to get through Uber. And one of those two could go wrong, and you might get a chance to buy things down. So that's what we've been doing for action alerts. So I have to be true to action alerts. When I say that we've been selling for action alerts to build a little cash, I can't come out and say, listen, I want you to buy. It's duplicitous. I'm not duplicitous.
Well, we might get a trade deal next Friday. We're not so sure. Now, I also want to tell investors, if they didn't already know, you wrote a great in-depth column this morning over on Real Money about the Fed's decision and why you didn't think that they should have changed. Now, I think that this gives us a great opportunity for an investing education question.
Oh, for sure.
And that would be, what is the first thing that investors should consider before buying or selling after a Fed announcement?
Okay, I think that they should just give it some window. One of the things that I've seen is when you're ahead of the employment number, okay, like this one was, you have to wait. The employment number is the most important thing that occurs. But there's a swirl, and I've written about this multiple times, there's a swirl that involves this 1 to 2 to 3 period on the clock where guys bang out, guys buy, guys bang out. Just give it some room. Let things shake out. The market is not able to calculate what the Fed says instantly because there's too many cross currents. So just wait. I mean, the worst thing that would happen is that you miss things by a little bit, and I'm fine with that. For action alerts, we've always felt that you can take a half, you can compromise. Like we did with Disney, we said buy half before the meeting and then buy half after. Well, then unless it takes off. I feel if the market goes down and you buy it at 3 o'clock, you'll feel foolish. One of the things that I've always emphasized with all my books and all the things that I like to teach is the fallibility of an individual. And a professional comes on and never admits that they ever got anything wrong. So when an individual buys something and then it goes down a lot, they get very discouraged. They say, darn it, I should just give it to a professional. But the truth is professionals buy a lot of stuff and then it goes down. I want to inspire confidence in people, and you don't inspire confidence when you buy stocks and then they plummet. So I like to give it a little berth, because it's too hard for the market to process.
Let's switch gears, Jim, because I want to talk to you about Qualcomm. Qualcomm announced earnings last night.
Geez, stock shouldn't be up. The company was basically cautious. The company's talking about 5G being far out. The stock has moved from 59, straight line, and it was down, and then it moved up. And we're not getting the kind of thing that is rational. Profit taking is rational. I'm trying to get ahead of profit taking. You're not going to see profit taking in United Health, but you could see it in Qualcomm.
So what is one main takeaway that investors should take away from the earnings call?
People are too over-exuberant about the same thing. Over and over again, we've bought a stock on 5G, over and over again. Well, you know what? At a certain point, we have to say it's gotten ahead of itself. I actually think Qualcomm's gotten ahead of itself. And this, again, a lot of people say Jim's turned into a bear. No, I mean, stocks can get it. Disney at 142 got ahead of itself. Caterpillar at 142 got ahead of itself. Boeing at 380 ahead of itself. I mean, I just worry that stocks are going to get ahead of themselves, that a lot of your stocks will get ahead of themselves. And I just don't want people to buy things precisely when they should be selling.
Now, Qualcomm is Real Money's stock of the day, which means that Kevin Kern, our Real Money reporter, will be covering it wall to wall. So you got to go check that out. Now, Jim, we got to move on because I also want to talk to you about Tesla. Now, Tesla's making headlines today because Elon Musk, Tesla filed a shelf offering. Elon Musk may pay $10 million for 42,000 shares. You know,
it's a sign of conviction. I don't know what else it is. A sign of conviction. I know it frustrates short sellers. I know that the offering raises the capital that they need. I know that there are a lot of people who felt who could possibly do the offering, so to speak. It turned out to be a firm that has a sell on it, Goldman. The money, I think the convertible's done at a pretty reasonable price versus the balance sheet. But when a CEO buys stock on an equity offering, it's bullish. Now, it's a sign that things are better. Now, you could say he's delusional, but he's not. I mean, they're making hundreds of thousands of cars, and if you believe that the auto market's going to come back, particularly in China, then you want to buy. I mean, look, we own Dow DuPont, okay? And the thesis underlining them is that they've been hurt by China auto, but they think China auto is going to come back. Well, you think China auto is going to come back, you could buy Tesla, you could buy Dow DuPont. So it's not a crazy thesis just because it's Tesla.
Now, I want to rewind because you mentioned...
I'm not telling people to buy it. I'm just saying it's not a crazy thesis.
I want to rewind for a second because you mentioned short sellers, but I'm wondering, for the average investor, what should they take away from this news?
Well, I think that what you should take away is that when you think a company can't get financing, remember Tesla. Because Goldman Sachs, the Goldman Sachs I worked at, would not have a cell in the research department and do the underwriting. It just wouldn't happen. I know that when I was working at Goldman, there was a research guy who said, listen, Jim, that's a sell. And I'd brought in very big underwriting, and the underwriting was killed because the analyst wouldn't get behind it. Now the analyst is against it, and they do the underwriting. Pretty telling how things have changed.
All right, Jim, that's all that we have time for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on ActionAlertsPlus.com. There we will be talking more on earnings from this morning, such as Dow and Dow DuPont. You can sign up at ActionAlertsPlus.com to watch. I am Catherine Ross, and we'll see you tomorrow.
Thursday, and I'm preparing for it already. We have our conference call.
Your Action Alerts Plus conference call, yeah.
I really want people to, those who are watching who have not experienced it, I wouldn't put it this way. I used to, when I was a hedge fund manager for 14 years, I would send out a letter at the end of every quarter. Here I'm giving you an in-depth conference call like some of the funds do, but very rare, that really kind of bears all of my soul. So I'd like you to sign up, even if am I being craven? Do I really care if you sign up or not? I think it's really good. I spend a lot of time on it. And I'll tell you, my wife, Lisa, is always like, Jim, why do you start Sunday preparing for a call on Thursday? And the answer is because I care passionately about the members of the club.
And you know, the theme of May is always sell in May and go away, but you don't believe that. So this is going to be great for people who are actually looking to actively invest.
I've always said if they didn't rhyme, no one would ever say it.
Yeah, there we go. All right, so we'll see you guys tomorrow.